everyone, I'm Nina Bambushiva covering crypto here at Forbes. Today with me is Dr. Adam Back, who is best known as the founder of Hashcash, the proof-of-work algorithm cited by Satoshi Nakamoto in the Bitcoin white paper, and also co-founder and CEO of Blockstream, Bitcoin development company. You are also about to lead what will be one of the largest Bitcoin Treasury companies that is going public with backing from Cantor Fitzgerald. It's great to have you here with us today, Adam.
Well, thanks for having me on.
Yeah, so we are 17 years into the Bitcoin era. Bitcoin is now trading well over $100,000. It has been announced as part of the Bitcoin strategic reserve by the US government. We've seen a wave of dozens of companies, if not hundreds, adopt it as a treasury asset. So I'm curious, how do you view the political, economic, and social reality of Bitcoin today?
Yeah, I think it's gone through sort of three different phases. The first wave was the early adopters, people who would buy Bitcoin on Bitcoin exchanges. Once there were Bitcoin exchanges, there was a period where there were none. And then second wave is basically the ETFs. So, of course, there have been ETPs and ETNs in different countries, but it took a while to get the spot ETF approvals in the US. And so with BlackRock and the other providers, Fidelity and so on, that provided access to a different group of people. So people who interact with savings and investments through a broker or a financial advisor or an online platform for share trading are then more easily able to interact with Bitcoin and buy Bitcoin. So apparently about 30% of the money in the BlackRock ETF is institutional, but the other 2/3, so the bulk of it, is actually individual savers in the US. And then the third wave is the treasury companies and the institutional buyers. So companies that are using Bitcoin as a treasury asset and really just to protect their cash reserves as an operating company from inflation, effectively. And the institutional adoption goes along with that, which is the early pension funds buying Bitcoin, some sovereign wealth funds, the Swiss National Bank buying treasury companies that are themselves buying Bitcoin. So you've got all these indirect effects and some ETFs that are sort of more strategy ETFs on top of Bitcoin treasury companies or on top of Bitcoin.
Is everything, the adoption curve, going faster, slower, or about the same as you expected?
Yeah, I think much faster. Now, of course, if people look day to day, they don't feel the speed, but certainly the case that 5 years ago, nobody would have anticipated institutional buying, even sovereigns and governments, a few governments that are directly buying Bitcoin or directly mining Bitcoin with national energy reserves. And going back a bit before that, there was a period where no financial institutions were interested. Blockstream started in 2014, and at that time, the banks generally didn't want to know about Bitcoin. But after already a few years, effectively almost every major financial institution had their own blockchain R&D lab, but they wanted to talk about blockchain, not Bitcoin. And then that swung. Now they want to talk about Bitcoin, the asset class. They want to provide, financial services, access, and put model portfolios together to put Bitcoin or Bitcoin ETFs into their general portfolio recommendations.
Yeah, the floodgates have opened. Is there something that concerns you? For example, there are voices who worry about the politicization of Bitcoin. When the Bitcoin strategic reserve was announced, for instance, how did you welcome that announcement?
Well, while the current administration has, brought in a more open for business regime in the US, which I think, will continue afterwards because there are many big financial institutions that have, built long-term plans and have very large investor money in such products. I think ultimately Bitcoin is apolitical money. It's perhaps in the same general class as gold, right? Where it's not affiliated with any politics or era or religion and has been around for thousands of years. So I think effectively what humans have done through the ages is find the best money technology they can. And there were things before gold that were inferior. Gold was discovered and adopted, exactly how lost in the history. But I think effectively Bitcoin is a better store of value technology, a better monetary technology, a hard money. So kind of like a commodity money is the close analogy perhaps. And so I think that is the the direction to look at it as apolitical money that people from all across the spectrum, from different cultures or political leanings, will all be buying Bitcoin. So I mean, some people will even say Bitcoin is for enemies, right? It's not about a group of friends buying it; it's about everybody buying it, and that was always the case with gold. Different countries that might be at war with each other even are building gold reserves or drawing on their gold reserves and so on.
Yeah. Well, at the same time, we have heard expectations when the U.S. announced the strategic reserve that other governments will follow suit. And I think since then, there have been a couple of announcements, I think from Pakistan, that they are also putting Bitcoin as part of their strategic reserve. So is it that apolitical?
I mean, I think it's really just looking at it from an asset perspective and its past performance and the potential for continued adoption. So countries have gold reserves, and some countries have depleted them. That generally hasn't worked out well over the longer term. But now the concept of diversifying that position to also have a Bitcoin component to a national reserve is coming into play. You can see, because not all countries have a sovereign wealth fund or that many kind of long-term state savings assets, but of those that do, like the Middle East, like Abu Dhabi, some of those sovereign wealth funds have got direct Bitcoin exposure. The Swiss National Bank has a 1% allocation of its share. I mean, it has invested in many things, but of its share allocations, I believe 1% of that about is in MicroStrategy, which of course is an actively managed Bitcoin position in itself. So I think you're seeing it happen in different countries, and I think the US improved regulatory environment has actually encouraged more countries to approve access to Bitcoin products through tax advantaged accounts, to open the regulatory gates for financial institutions to offer Bitcoin products to their clients. So while it's been the case for many years that individuals in most countries have been able to buy Bitcoin through a Bitcoin exchange, in many countries it's been difficult to buy it in an ETF because there was no approved ETF, or even the overseas ETFs were precluded from use. And that was the case in, for example, the UK, which has been quite slow. And even the UK FCA is now apparently on track to approve Bitcoin ETFs next month, so October 2025. So we'll see how that develops. And certainly what had been happening in some of the countries that didn't have Bitcoin ETF approval is they would buy proxies of Bitcoin. So they would buy public company shares. MicroStrategy being the earliest, it no doubt benefited from that effect. And there are, sometimes domestic advantages to buying a Bitcoin Treasury company share in France or in Sweden and so on. And so you see that, and in Japan as well, there's a very big difference in the way that Bitcoin as an asset was taxed compared to shares and ETFs.
And ultimately, everybody worries about inflation, and this is why you mentioned we see a wave of companies adopting the Bitcoin standard. But also, you mentioned MicroStrategy. Everybody has seen their incredible performance and some of the other copycats. You are also about to launch Bitcoin Treasury company. So I guess you are a believer of the trend, but for many people, the only question is, how long will the music last? How sustainable is this? So what are your thoughts?
Yeah, I mean, I was a relatively early individual investor in MicroStrategy, and the way I think about, you can see that how their thinking evolved because they were very transparent about their thought process through that period and today as well. And really, it was during the COVID era where there was a lot of quantitative easing, and Michael Saylor, as the CEO at that time, was concerned about the effects of inflation on the spending power of their $500 million cash reserves. And so, talking through with a friend of his who's a fund manager, Eric Weiss, try to think of some strategy, buy real estate, buy gold, what could the company do to preserve the spending power? And that's where they settled on Bitcoin. So you can see it's a kind of defensive move. I've also said another way to look at it is effectively, given the past decade performance or the rolling performance over 6-year periods over the last 15 years, that Bitcoin has really been the outlier asset class that's outperformed most things, had a good Sharpe ratio. And so effectively Bitcoin is the hurdle rate, if you like. So normally with a hedge fund, you might negotiate a hurdle rate, which is the prime rate or the government treasury rate of return. So I'm saying actually that Bitcoin should be the hurdle rate for long-term investing or long-term value preservation. So if you can't outperform Bitcoin with a strategy, my argument is maybe you should just buy Bitcoin with an allocation. And so you can see that the companies that are doing it are benefiting not just from the inflation protection, but the long-term performance curve, which is, of course, most closely correlated with Bitcoin adoption because it's still early stage. And with a treasury company, they're an actively managed vehicle. So unlike an ETF, which can really only hold the asset by mandate and has its management overhead, so annually small fees coming off, with a treasury company, they can use capital markets access to increase the Bitcoin per share over time, so that it's, the objective of those companies is to increase Bitcoin per share. So they have been able to maintain and develop what's been called an MNAV, so that the market cap multiple above the net asset value of the Bitcoin, so multiple of NAV. And that's basically because people are looking at it a bit like a PE ratio in a sector. What is the past MNAV and the other metrics? How fast are they increasing Bitcoin per share? How large are they? How many Bitcoin do they have? What's the track record? How good are their execution to keep the corporate actions going? And in the case of Bitcoin Stranded Treasury, which is the company that I'm working on, we have also an active mandate where we will look to deliver returns on the Bitcoin. So most of the treasury companies are actually cold storing, passively storing the Bitcoin in institutional custodian or something like that, whereas we see that there is opportunity to create a return on Bitcoin. The CIO of the company, Sean Bill, actually is a several decade hedge fund veteran, and also spent a decade in pension funds, and actually was the CIO of the first pension fund to put Bitcoin on the balance sheet, with coincidentally a similar allocation recommendation for Bitcoin to the pension fund that BlackRock has now delivered in its model portfolio. So BlackRock has said 2%. At the time, Sean was saying 1 to 3%. This was in 2017, and it took a few years to get that through the process, so 2019.
So you were thinking about it for a while, because a few months ago, I remember we talked about launching return strategies on Bitcoin at Blockstream. So how are you now balancing your work with Blockstream and the Bitcoin Standard Treasury company?
Yeah, so I'm CEO of both companies. Sean Bill's the CIO at Bitcoin Standard Treasury, and Blockstream is primarily a technology company. We have technology to support securities on Bitcoin Layer 2 called Liquid. So there are on there about 4 billion different kinds of real-world assets, including topically tokenized treasury company shares for today, MicroStrategy and MetaPlanet. So those are tradable 24/7, priced in Bitcoin. So unlike the different markets in different time zones, priced in dollars or yen, and with inconvenient time zones sometimes, or hard to access markets. So it gives sort of a different market access and the Bitcoin pricing. So that's using, the Liquid network was a technology built by Blockstream. There are a number of other types of assets on there from different providers. And with Bitcoin Standard Treasury, we are looking to bring to market inside the company the active strategies to derive a yield from Bitcoin, and also some hedged multi-strat strategies as well.
So I guess that is the differentiator for you, but any other things that would define your company as a standout in the saturated market?
Yeah, so I think we were very pleased with the Fundraise result. It was completed in 36-day period, so very compressed. And we were able to raise about twice as much as the largest runner-up in terms of the Wall Street capital, like the institutional capital coming in. So about 1.3 billion.
Was it 21 Capital?
So 21, I'm not sure exactly who's the runner-up, but they were another large one. We were able to raise about 1.3 billion between the different types of instrument, the equity pipe, uniquely and first in the US, a Bitcoin denominated equity pipe in addition, which brought in 5,000 Bitcoin, and also convertible notes, and another first, a perpetual preferred, so a convertible perpetual preferred, which is sort of similar to Strike that MicroStrategy got to after many years in the market. We were able to bring one of those and place that during the initial kind of SPAC related raise process, right? So at this point we are awaiting regulator approval, so we'll have to see when that happens. The underlying ticker is SIPO, and the proposed ticker post-business combination agreement is BSTR, Bitcoin Standard Treasury.
If I remember correctly, what was announced was that at launch you'll have at least 30,000 Bitcoin. So clearly you view scale as an important factor. Is it a primary factor of success, do you think? Kind of go big or not do it at all?
Well, I think the one differentiator for BSTR is that most of the capital was Bitcoin. So there's 25,000 Bitcoin in the BSTR NewCo, which is proposed to merge with the SPAC, and then the different kinds of pipes, converts coming in as well. And so roughly 2/3 of the capital was Bitcoin. So many of the treasury companies come to Wall Street, raise capital, buy Bitcoin, and then try to market and operate that company. Whereas we were coming to Wall Street with 25,000 Bitcoin plus 5,000 Bitcoin from the ecosystem, significantly Bitcoin individuals, and then adding institutional capital to that. So it's a kind of different balance, different combination. It's bringing Bitcoin to Wall Street rather than taking money from Wall Street to operate a Bitcoin strategy. So with that, we hope to have out of the gate more Bitcoin-centric investors, for example, than the other companies. So a different investor base. Of course, also a number of blue chip and quite interesting institutional investors in there as well.
Yeah, Cantor is your partner on the SPAC, and they have been incredibly active recently in this space. Also, you said in one of your recent interviews that you think every company will ultimately be a Bitcoin treasury company. How so, and is it a good thing?
Well, I think that as Bitcoin undergoes adoption, and as I've been saying, that Bitcoin is the hurdle rate. So if a business or investment fund can't outperform Bitcoin, and statistically that's generally been the case for most alternative investments for the last decade, then if Bitcoin is the hurdle rate, the only way to compete with that is to internalize it, i.e. to run your company on Bitcoin, to hold Bitcoin as a reserve, operate the business, buy more Bitcoin, reinvest in the core business, buy Bitcoin with the excess revenue, and operate on that basis. So, and then I think another question people will ask is, will this get saturated? How scalable is this market? And I think ultimately the potential addressable market for Bitcoin is enormous because it's the sort of cash and monetary premium assets in the world. So potentially the bond market, the stock market you can see is in the last period quite correlated with M2 monetary expansion. So effectively there's a monetary premium in all kinds of assets, real estate, art, things like that. And so if you add that all up, estimates vary, but it's, hundreds of trillions of dollars. And so if you look at it from that point of view, it's still early days. And if it does reach that kind of adoption, presumably it becomes more stable. The adoption curve, starts to saturate as it tops out. But there's a long distance between the capital that's been absorbed into Bitcoin today and that far future. So I would say that ultimately this kind of strategy could absorb, a significant proportion of the Treasury reserve assets of even very cash-rich companies like Apple, Microsoft, Berkshire Hathaway, and so forth. So today it's an early phenomena, and the market's still getting to grips with the concept of Bitcoin asset class and the concept of combining that with a public market company, with a sovereign wealth fund, with a pension fund, or individual investors, using ETFs or advised by financial advisors.
You're right. I think there's still much confusion around basic concepts, even like custody, securing your Bitcoin. So how, in your opinion, will the industry, the world have to change to face that reality where we'll have virtually everyone on the Bitcoin standard?
Yeah, I mean, there could be some analogies for people who are a bit older of the experience of the internet coming about, because I think within a period of about a decade, it went from companies being very suspicious about connecting to the internet. They'd want to run an intranet, like an internal network. And, within a decade, most companies had an internet presence, and of course, more recently, smartphone apps and so on. So I think that over time, the world gets accustomed to new technology with a new advantage, and the ways to access it become easier to use, and people learn the concepts, and they look at other asset managers and other firms to see what they're doing, and they draw kind of inferences and confidence from other people's recommendations. So it's not just BlackRock, more and more firms coming out with their model portfolio or their summary of the asset class, position papers and things like that. So I think there's a kind of new technology adoption curve which often looks like that. Of course, we don't, there aren't many technology adoption curves of this significance in history, so we may not necessarily have lived through one, right? Because internet's been around, mobile phones have been around, so we haven't had a recent one to think about. And AI, I guess we're at the beginning of that, so that's an interesting example. And where that will lead, we don't know yet, I guess, right? So I think Bitcoin has some of that phenomena about it, that it's a once in thousands of years evolution of a new money, a new hard money, and it's quite different to the current fiat money. Fiat money itself, of course, in our lifetimes and our grandparents' lifetimes, that was there, but it's not that old on the arc of history, right? From the introduction of fractional reserve. So we don't know quite where the kind of hard money assurances of Bitcoin as an improved gold and store of value technology is going to fit in terms of allocation versus fiat currencies, but it could bring about a different era of where companies and countries and individuals allocate to preserve their spending power.
So you're saying we're still early, but we are a world away from, say, the last bull market. And now that we have this universe of investment options, from exchange-traded products to funds to other funds to companies that invest in Bitcoin, do you feel that your role as a technologist and other technologists' role is increasingly shifting towards steering it as an investment asset rather than a technological innovation?
I mean, I think it's both, because part of the value proposition is for the parts of the world that are underbanked. So you see a lot more day-to-day retail payment uses in emerging markets where many people don't have bank accounts, or they don't have access to PayPal, or they don't have government ID. And that is, a surprisingly large percentage of the world's population still. So for kind of remittance and local uses, that works. Whereas in the developed world, most people have payment apps, debit cards, credit cards, PayPal, anything they want. They have multiple choices, and it's a generally has typically been a low enough inflation environment that people are really not cognizant of a euro or a US or a British pound or a Swiss franc inflation rate. They don't feel it, but I think they're starting to feel it in the post-COVID era, where there's been sort of waves of quantitative easing and M2 monetary expansion. So I think that has brought into focus that inflation is something that people in the developed world are starting to look for alternatives to address.
When we talk about financial innovation for the developing economies, we increasingly talk about stablecoins. And I don't think I've ever asked you what you think about stablecoins.
Yeah, I think the stablecoin is effectively a more modern alternative to wire transfers that arose from the Bitcoin trading environments maybe a decade ago or something. So I think part of the phenomena was that because Bitcoin was new and sort of a grassroots phenomena, the banks that were asked to provide banking service to the Bitcoin exchanges were suspicious. And so it became difficult. So there was inefficiency in the wire transfer process because they weren't able to get access to top tier banks that a NASDAQ or something would have. And so the stablecoin emerged as a way to rapidly move dollars or euros between Bitcoin trading venues. And then, over time, that became attractive to small businesses and individuals as a convenient, low friction way to move a small business wire transfer on a weekend or within an hour with, kind of less friction, less paperwork, less process. So I think it's starting to have, remittance and wire transfer competition. It's also, a big buyer of government bonds because they have to look to protect the backing of the stablecoins. So particularly with Tether and Circle, they're big buyers of US Treasuries, and I think Tether has now maybe 170 billion. So it's getting up to the size where they have more US Treasuries than some major countries. So it's an interesting phenomena because it's a new kind of business model. So you're seeing sort of wider interest in introducing more stablecoins into the market.
How do they fit within the future you're envisioning for Bitcoin?
Well, I think they are using a similar technology rail. So, for example, with Blockstream's Layer 2 Liquid, which is focused on transfers and share settlements, there is Tether stablecoin on there. And so that's actually convenient for sort of OTC trades because you can represent the dollar in the same network, and so you can have smart contracts or sort of non-custodial trade settlement between a dollar proxy, being a Tether stablecoin, and Bitcoin or Liquid. So it's quite convenient to be able to interact with the dollar for trading purposes. And of course, on Liquid, there are a lot of real-world assets like shares and corporate bonds, small business loans, promissory notes, and some of those assets are easier to trade against the dollar because they're dollar, correlated assets, right? That's a corporate loan or something.
Yeah, creating that ease of change further. What keeps you up at night about Bitcoin, and has it changed from, say, the last bull market?
Well, I think it's got more robust over time in terms of the technology. The technology is maturing, higher and higher quality assurance, better ease of use over time, more competition, more providers of technology, and over this third wave of ETFs and then treasury companies, you're seeing the interfaces between Bitcoin, the asset class, and the traditional financial rails coming, which is significantly basically the ETF wrappers. That is effectively a different way to interact with Bitcoin. So it's a sort of bridge between Bitcoin, a physical asset, and the share and bond and ETF kind of interface. So it makes it much easier, for example, to add Bitcoin into a portfolio, to have cross collateral. So I use Bitcoin as collateral for a Lombard loan, like a portfolio loan. So it is sort of bringing Bitcoin into both worlds. So historically, the Bitcoin trading environment has been on startup trading platforms, which were siloed from brokerage accounts and savings accounts. So with the sort of combination and merger of those, you then get more efficient use of capital, and the traditional financial world is also starting to see Bitcoin as a good collateral asset for lending. Although volatile, it's 24/7 traded, it's extremely liquid. So from that point of view, it makes a good collateral asset, and you get improved liquidity by having all of the assets cross-marginable. Otherwise, if you have a particular portfolio and you split it into two halves so you don't have cross-margin, it amplifies the risk.
Lastly, I guess you've already shared your long-term predictions, but maybe you have some short-term ones.
No, I mean, it's quite hard to predict Bitcoin in the short term. I think, the adoption curve is going at fast pace. We're in this third wave era where you're seeing productization of Bitcoin within financial institutions. Many of the major financial institutions are in the process of developing the training materials, the procedures and processes to make Bitcoin products available to their clients, either inside mutual funds, managed products, or advised access to Bitcoin model portfolio recommendations. And so, that is something that takes time for those processes to run through. But I think we haven't seen the impact of that in the market yet because it's still underway.
We'll keep watching. Thank you for joining us, Adam.
Thank you very much.